All right, mic check. All right, let me know in the chat if y'all can hear me. All right. See here. Let's get this off the screen. All righty. So today is a little bit of a it's a little bit of a different stream. Obviously, you guys know I normally do this a lot later at night for beers and Bitcoin. Today is a little bit of a different time. I'm kind of distracted. My wife is going in for surgery later this evening, so I'm kind of distracted, kind of disheveled. Just kind of nervous. This whole week, really haven't really been keeping too close of an eye on the markets this week, as you guys know, as I announced, today. I don't really normally make too much of like my personal stuff public or whatever, but the wife is going in for a gallbladder surgery. So I've just been, my head's kind of been in the clouds with all that, just a lot going on, like emotionally and stuff like that. So, just a little bit worried and everything. So we're going to take a look at the take a look at the stream. We're going to take a look at the charts. I do have quite a bit of charts here. I'm actually probably going to go through the majority of these. We will start on Bitcoin, and then I'm kind of going to move through these one by one. It will be a little bit of a shorter stream. I do have a special announcement for like the VENOM algos at the end of the stream. So stay tuned for that. If you're new here, I know that this is kind of like a weird time to be streaming. This is normally at 8 p.m. Central, 9 p.m. Eastern. Obviously, I'm not drinking beer in the middle of the day before I have to take my wife to the hospital. So, there is that. So I'm just kind of drinking water, trying to stay hydrated so I don't have to pay for the ridiculous like $10 bottled water at the freaking hospitals. Anyway, now that all that's out of the way, we'll go ahead. Let's go ahead and make this full screen. That is not the chart I want to make full screen. Make this one full screen. So we're going to start here. Let's take a look at the weekly first. So weekly rounding up. I mean, this is just, it's like we went from like, it's so over to it's so back in like literally one candle. So, well, actually the it's so over part was just like a slow bleed, and we formed this channel slash wedge. I had it drawn as a wedge. A lot of people had it drawn like this as a channel. Doesn't really matter. Either way, it is a bullish pattern since the overall macro trend is up. But anyhow, absolutely massive breakout here. Now, I've been harping on this pattern breaking out for literally weeks now, probably at least the last 1, 2, 3, probably 4, about a month that I've been harping on this pattern now breaking out. It finally happened in an absolutely major way. This is the largest green candle since we saw back here in March, since this time in March. So very, very significant move to the top side, right? So literally in 2 weeks, if we measure this from bottom to top in 2 weeks, it was almost a 27% move. So that is a very significant move. Obviously, we have seen moves like this in the past. This is pretty much what I expected, right? So if this week closes, like this is pretty much on the macro. Let me just state this. On the macro, this is the level that you need to be watching. This is the level that we absolutely have to close above, which is 30,300. I have in my mind, no doubt that we probably will close above 30,300, before the daily candle ends in another couple days. So that's the level to be watching. If we do close above that, this confirms a continuation. There is a possibility that, we could get like some kind of pullback to be retesting this very important level here at about 28.8. So, that would be actually, on the macro, on the weekly chart, that wouldn't really look like too much. But that would be a pretty significant, over $2,000 move. So that would be where I would be looking for kind of a pullback, or maybe in this area here to test the tops of these candles at like 29, what is that, 29,230-ish. But in general, huge move to the top side. Now, if we take a look at the indicators here, obviously we've got, this was kind of confusing to me. If you look at the momentum here, the momentum started turning bullish way back here about a month ago. And this was like such a weird kind of fake out because the lines crossed below into bearish territory. And then we got this bullish cross, obviously, on this huge candle. So kind of a fake out on the momentum. Obviously, that is a lagging indicator. But in general, I mean, just the volume on this candle is just absolutely massive. Not very many people were able to predict this. I mean, most people were looking at this pattern and saying, oh, yeah, like we might break out. But I don't think anybody was expecting like a massive $4,000 move, almost $5,000 move in a week. So very, very explosive move here. As I mentioned in the video that I did on Wednesday, we are starting to see a little bit of bullish divergence or bearish divergence form here. Okay, we can see that by the tops. If you take the closes of these candles, right, we've got a high here, and then we've got a higher high in price, but we've got this lower high here on the RSI. So just something to keep in mind. Obviously, I'm not going to be like exponentially fading this move just off of like a weekly divergence alone, but it's there nonetheless. And, it should be something that you take into account. But we just got the stream started. I noticed some other people joined in. Again, yes, this is a lot earlier in the day than I normally do these. My wife is having gallbladder surgery later this evening, so I'm probably going to be at the hospital for the majority of the night. But anyway, so I want to still give you guys, the content, the updates on the markets and stuff like that. Anyhow, that pretty much sums up the weekly. Let's bring this down to a daily and kind of just start breaking this down on where these important levels were laying. Okay, so obviously down here, hello from London, UK. That's awesome. What's up, Sputnik? Nice name. The handle checks out. Anyway, so we put in a new June low before this absolutely crazy bounce at 24,800. In my opinion, this is probably not getting retested because there was old May lows through here that got swept, and then there was old June lows that were back here, okay, that also got swept on these candles. I would consider this entire area here probably retested. Now, the old June high here, this also got swept to the top side. However, it didn't get retested. I guess that would be bullishly, right? Like if you come down and then you test it in spring, that's a bullish retest. I'm maybe not even expecting this level to get retested. However, it would be nice because for a very long time now, again, since, like early or mid-March, this was a very, very important level that we struggled with all through here for weeks and weeks and weeks until this really explosive breakout. So again, we swept that May high. This was the most important level to be sweeping. This is where I thought that we were going to see the most resistance, and it ended up just producing a spinning top, and then we continued to the top side today. So pretty impressive, to be honest. We did just put in a new June high. You can see I haven't looked at the charts all day today. I haven't even posted on Twitter for most of the day, but we did just put in a new June high for the day, which is now not at 30,800. This is actually at 31,431. So we can actually change this. By the way, on your macro charts, you don't have to show these lines like on every single time frame, but it is important to take note of where these levels are and to label, a good part of them on the chart and update them like when they've gotten swept. Obviously, as time progresses, if the price never comes back to those, that they're kind of irrelevant. But I like to leave them on my chart for like a good month or two, and just kind of see how the price action plays out, see if the order blocks are still relevant, in a few weeks, and kind of go from there. It's a good reference point to keep in mind. And normally these levels line up very well with untouched points of control. So, if I was going to scale this down to a 4-hour, you can still see these lines here on the 4-hour. And the reason why is because if I turn on our volume profiles that have all those naked points of control, you can see how sometimes those levels kind of line up, okay, with untouched levels, points of control, right? So we've got a naked one here, a naked one here, one that's on the way to those levels. And then our May high also has a point of control. So this would probably be the most likely area that I would be looking at for a pullback first. And that's basically a retest of 30K. Now, again, I'm not going to sit here and be like, oh yeah, we're definitely going to pull back right just now. And, we're going to retest 30K. While that is a possibility, because this does look, if I take this off the screen, if we were going to be doing some Fibonacci, right? 1, 2, 3, 4, 5, that would be a 1. This is a 2, okay, through here. 1, 2, 3, 4, 5. This would be a 3. And this looks like a consolidation for a 4. That means that this would be our 5th and final wave up. This, however, if you're just looking at this segment of the price action, this does not look like it's complete at all. Even if this is a 1, 2, 3, this would be a 4, and we would still have one last leg up for probably some kind of a blow off. Now, obviously, that's for those of you that do Elliott wave theory. I don't trade off Elliott wave theory. You guys know this. I don't think it's total bunk, but I'll never make a trade decision off of that stuff by itself. However, it is important to know, because it's important to know how price structure works, right? If you can identify the price structure in here, ABC, okay, that's a 2, 1, 2, 1, 2, 3, 4, 3 is always extended, right? Like this was the extension move. So you can almost be guaranteed that that's a wave 3, right? This would make that a 4. Okay, so now it looks like we're getting some kind of like a 1, 2, and we've got like a 3, 4, 5 to go. So, between 33 and 35,000, that would probably be my target for the top side here. Now, if we came down from here and swept this May high, that would break structure. And that would mean that this move is already done. Like that was the whole 5 waves up from here. But the way that I just broke it down, it's not looking like that to me just yet. What's going on, Nick? It's not really looking like that to me yet. It looks like like this is probably a wave 5 from here, and we still have, a couple more to go before it actually tops out here. Now, that's just my prediction. I'm not going to say, hey, like if you haven't longed this whole thing, get into a long right now and hope that you get up to 35K. Not a good strategy. If you weren't long for the entire thing, then my suggestion would be maybe play on lower time frames or wait until, like watch the volume. You know what I mean? Like obviously price structure first, volume second. That's the way that we trade. So if we're taking a look at volume and we're looking at our momentum and our indicators and stuff, on the 4-hour chart, you can see this may look like it's starting to flip over here, but how many times have you guys longed into something or shorted into something like this? And, you get that blow off, you get a blow off top to the top side. It knocks you out of your short and you say, oh man, I need to get long again. And then you literally end up longing the top up here right as the price like rejects from here and then comes back down. So just be careful, be mindful of those situations. These divergences, they do take time to play out. Don't take a trade off of divergence alone. Don't take a trade off of like Elliott wave alone. That's not a good idea. Now, what I will tell you is that this volume per bar that we have down here is significantly decreasing going into our weekend, a very, very significant decrease in volume here, while making higher highs in price along with this bearish divergence. Now that's 2 causes that would say, okay, maybe it's worth, punting or maybe laddering into a short, or if you're long from here or here or here, maybe taking partial profits and starting to hedge a short. that's always a really good idea, just to hedge the position, leave the, take some profit off the long, hedge short, open up a position on a sub account in the other direction. You guys know that when I'm in bull markets, if I do catch a sweet long, you guys know that when I start seeing stuff like this, that's the way I trade, especially on 4-hour, 1-hour timeframes. This is what I look for if I'm already in a long, to start laddering into a short. If I'm not already long and I'm looking for a short, this is the kind of stuff that I want to see, to kind of give myself a little bit of confirmation of, okay, maybe I'm getting an early entry here. Now, obviously keep risk management in mind, but that divergence is also present here on our MACD as well. If we look at our OBV looks like it's cooling down as well. We've got a higher high in price. We've got basically a flat top here, okay, on our on balance volume, and this measures spot volume, okay? So you do have a couple confirmations here of potentially the price action starting to fizzle out to the top side. That's good. Do you want 100x max short here for financial freedom? No, probably not a good idea. But in general, yeah, I think in my opinion, I think it's good for at least an attempted punt, right? If this move is going to pull back, and you were planning on holding a short, well, where would you plan on holding it to? Probably at least that would be a first target. This would be like a deep target here. And again, these are lining up with order blocks, right? May high, our old June high. Those would be like, this would be the scalp target here. That's where I would really want to watch, because sometimes you get like those head and shoulders fake outs where you do one of these and then it just boom, and it just skyrockets again for that next leg. So that's why this would be my first target. And then I'd be moving stops up into break even there to make it a risk-free trade. But again, keep your eyes. I think that Maine said this. I really respect Trader Maine. I've known him in the space for a while. We don't really talk on a regular basis, but I definitely respect him as a trader in the space. Him and I have been in the space for a very long time. And credit to him for mentioning this. And I want to re-mention it to you guys, is whenever you measure with fibs, again, it's not the kind of thing that you want to trade off of alone. You need to look for confluence. And what he recommends, and what I also recommend, is when you measure with a fib, typically when you look left, or if you have order blocks labeled, which were, in the past, okay, normally those fib levels, if they end up bouncing, it's not just because it's a mathematical level. It's also because it is either a pivot point or some kind of important order block from the near recent past. Okay. So always keep that in mind, look left. Left will give you clues, especially, when combining, if you're looking at Elliott wave to try and understand what the price structure is and see where you are, measuring with fibs to see, okay, where would my targets be for a short if I'm laddering? Where's my invalidation? Always look left and keep these order block levels like this in mind, okay? Because normally those are going to be the points that end up ticking. So triple confluence, can you guys spot it? Let me know in the comments if you guys can spot it, right? We've got our May high that was swept. When you measure the whole thing, that lines up with the 236. And then, oh, guess what? If you recall, when I had this turned on, there is also a naked point of control right in this area. Okay, so there is really good confluence in this area. If you're looking to get long between 30,003 and 29.7, that is a good place to be laddering long or taking profits if you're getting short. Okay, so triple confluence here. That's normally what you want to see if you're going to try and trade against the trend. You want some kind of really good level that has at least triple confluence. And for that trade setup, not only do you have good confluence there, but again, you've got the divergences. Okay, you've got the flat top on the OBV. You've got the double divergence with the MACD, and you've got the decreasing volume here on volume per bar with a higher high. Okay, so there is a short case scenario here. You guys know that I'm usually more bearish than I am bullish. Even in bull markets, I tend to try and short rips as much as possible. That's just kind of my thing. I know that that's not a very popular thing to do. I know that it's very risky, but low risk, low reward trades versus high risk, high reward trades. As long as you're keeping your risk management tight and you're laddering in as well as laddering out and performing trade maintenance, normally you're safe. And if you're new to the channel here, I do have videos on all of that stuff. Okay. Like risk management, how to ladder in, how to ladder out. Yeah, I've got tons of videos on risk management. It's one of the most important things when it comes to trading. And I know that I am a little bit more of a risky trader. I get DMs all the time. Oh, you're trying to short or whatever. You're like fucking capo. You're going to go broke. No, I'm not going to go broke, because if I take a loss, it's a calculated loss, and I laddered in and my average entry is a lot, higher or lower. And, it's all calculated, right? I can lose 5 trades in a row. But if I win one, it'll wipe all those losses out, and I'll come out on top with a small profit too. Okay. Because that's how risk management works. Okay. That's just the way that it goes. So, that's the first chart I want to take a look at. Obviously Bitcoin. I know somebody predicted Pepe prediction, Pepe to $1 million. I'm just kidding. Pepe's not going to $1 million. I don't even think I have it on here. Do I? Yeah, I do. Pepe to $1 million. Yeah, sure. We'll look at the Pepe chart, but then I want to get like a little more serious and get back into the actual chart. This actually has had a huge comeback here. This is impressive. I don't know if you guys probably don't label your charts like I do, but this was a pretty good level of support and resistance all through here. Very nice history and confluence with this level. This was the high to break for a trend reversal, which was here, about this level here. That was the level to be breaking. Nice retest here, went to the top side. Looks like we tested almost, well, I guess you'd call it this level here. Yeah. That's a pretty solid level too. So where is this at? 17.5. So you break 17.5. My first target would be here. Okay, so that would be the next target I'm looking for. So you want to be breaking these current highs, and this would be my first target for the short term. Okay, that would be my first target. This is an extremely important level. And what I'm going to do is I'm actually going to copy and paste this, and I'm going to move this up to here. This is a pretty important level that we have here. Kind of want to use that because it's the order block. This is your next major level of resistance here on Pepe. Okay. Now that's just kind of the way that I chart. Okay. Actually, this blue line, it actually almost acts as a midline for this range, if you want to call it a range. I'm sure on a higher time frame, this probably just looks like a deviation, which it kind of does. It looks like a range here, and maybe this is like some kind of a long deviation. But at the end of the day, I wouldn't really count too much on that. Whenever you're climbing back level by level, this is the kind of thing where you have to really take a calculated risk. As MD Juniad, I'm probably butchering that. I'm assuming it's like Dr. Juniad. But anyway, MD is like doctor, right? I know I'm not that retarded. An MD is a doctor, but anyway, I probably butchered your name. I'm sorry. Anyway, but yeah, so like price structure first, right? This is really bullish. We broke a lot of levels of very important resistance here and moved to the top side. However, again, look what you've got here on this 4-hour chart. You've got bearish divergence here. You've got decreasing volume on higher highs in price. You have a MACD that flipped over. That's actually been flipped over through here and looks like it's just gonna kind of pull some kind of a fake out like this and then move back to the downside. Let's look at the OBV. OBV is not it's not really going to mean much on a meme coin, but we'll look at it anyway. Here, so no divergence or flat top on the OBV. So I don't know. It's a meme coin though. Nobody really looks at on balance spot volume on meme coins. It's all derivatives volume, but yeah, I mean, like this is worth a punt too. Like any alts that rallied, like this is probably any alts that rallied with Bitcoin through here. Those are probably the ones that you want to be, fading or taking small positions on. That's just how I trade. Again, you know, like if you want to be a perma bull, that's fine. But if you weren't in a long on Pepe from here or here or here, you know, don't be longing now at the end of the move. You know, like that's not good. You know, obviously wait for some kind of a retracement, you know, 236382. You know, those would be like your first spots to maybe attempt a long. But down here, this major support level, this is where I deleted the wrong one. This is what I would want to see. Is I would want to see something like this and see this level hold, get into a position in here, right? With a stop below these order blocks, right? This order block here, a stop below this consolidation, have 3 or 4 orders in here, and expect a move up to here. And that would still be significant. You'd be making 82% on that trade. And that's on spot, you know, like you're talking 10x leverage. I mean, you're talking like a ridiculous amount, 800%. I'm short with stops in place. I think higher is very possible. Yeah, I agree. I agree. Sure. Like higher is 100% possible. But what I'm saying is longing here with like no risk management and like no laddered orders. And that's just like not the good thing to do. But yeah, I mean, if you have a stop in place, you're already ahead of probably 90% of traders. Most traders don't even have, like, especially on meme coins and shit, most people are not using stop losses at all. They just like, you know, they just YOLO it. They just YOLO long. So let's come out of this. I want to take a look at the S&P 500. Okay. A lot of people were trolling me for this massive wedge that I've had here. And it's just, man, this has been absolutely like nutso price action. In terms of like the S&P 500, it's been really, really crazy through here. And throughout this whole thing, you can see like this gradually slowing of the volume here. Just grinding higher, and the volume is just grinding lower. That tells me that the majority of this last part of this move here, this last leg up, I'm not saying it is the last leg up. I'm saying like right now, this is the last leg up that we've seen, the most current leg up, has just been very, very slow and grindy. And with the volume decreasing like that, it kind of tells me that the majority of this has been options and futures. And not very much like spot indices volume. You know what I mean? Well, when I say that, I mean like, you know, getting into like spot ETFs for, you know, for the S&P 500. So even here, like this is not looking good either. Like look at this price action, right? And then look at this. like what is this? It's like it's smiling at you like, hey, I might nuke on you, little evil face, right? So I don't really know what quite the deal is with this. I personally have not been touching legacy very much at all. How do you come back from a loss in a trade? I mean, there's a couple ways to do that. The most popular way is to win it all back in one trade. No, I'm just kidding. Like, don't do that. The best way to do it is to reevaluate. First of all, take a break. That's one of my favorite things to do. From coming off of like, if I'm on a losing streak or, you know, or whatever, like I took like a serious loss or something because I was getting cocky or something because I was on a winning streak and then I took a huge loss and erased a lot of the wins, or, you know, like I was just on a losing streak. One of the best ways to do it is to take a pause and reevaluate what your trading strategy is. You got to look back at those trades. It doesn't matter if you journaled them or not. I mean, your trade history is your trading journal. And what you need to do is you need to go back and look at that entry and figure out, why did you enter there? That's the biggest question that you have to answer is, what was your reason for entering the trade? Was your reason for entering the trade, your own trading system? Was your reason for entering the trade bullish hype and bullish propaganda on social media like crypto Twitter? Was your reason for entering the trade strictly based off of fundamentals? Was it based off of Elliott wave? Was it based off of a combination of indicators and, some kind of trading strategy that you have? That's the first question that you have to answer is, why did you enter the trade? Once you figure out why you might have entered the trade just strictly based off of emotions. I'm not knocking you if you did. We've all done it. I've done it. I've been trading for 12 years. If you think that I've never entered a trade emotionally or revenge traded, you're nuts. I've blown up accounts like that. It is very difficult to come back from a loss. Now, if you blew up, it also depends how big the loss is, right? Like if you were trading and you took a 50% loss on the entirety of the portfolio, the best thing to do is step away, don't trade, and replenish the portfolio with cash, and then take a very close look at what your trading strategy was and why you entered into that trade, and figure out why you did it, what went wrong, and correct for that. Like, understand the mistake that you made before you start trading again. If it was because of a trading strategy, that's kind of the thing where you should pull back, not trade, and then you need to further test that trading strategy on paper. So like paper trade it, right? You can always come down here to the trading panel. Okay. You can always come down here, click paper trading and be like, yeah, I'm going to start an account. Yay. Okay, cool. You've got an account now. $10,000 starting balance. It's fake. And you can just go through here and you can paper trade that. I always recommend doing that with any new strategy, with any new trading technique, with any new pair, as even new pairings. If you're trading a new market, my worst loss was 0.6 Bitcoin. That's a pretty significant loss. Yeah, that's pretty significant. I think that's about my biggest loss too. Like 0.6 Bitcoin is what, like maybe about it's like 15, so like 16 or 17,000. Yeah, that's about right. I think the biggest account of mine that I ever blew up was like between 15 and 20K, and I blew it up. I mean, I've watched people on Twitter blow up 7-figure accounts. So like Satoshi Flipper, like 2 or 3 years ago, he blew up a 7-figure account and he like disappeared for like a year or two. It happens to the best of us. Okay. Like, you could have the best trading strategy in the world, but as soon as you get emotional about your trade, that's what's going to fuck you up the most. Like, if you're coming off a losing streak and then you're like, oh, whatever, and you're just mad, like, fuck this shit, I'm just going to short it to zero and short it. You're revenge trading. You're letting your emotions get the best of you, and you're not entering into trades that you normally would. You're not entering into high risk to reward ratio trades that are going to yield a high P&L. You're probably not implementing any kind of risk management with that, because you're just revenge trading. You're just trading off of your emotions. That's like literally the death of traders. Like, it's the worst thing that you can do. We're humans. We're emotional creatures, right? It's one of the most difficult things about trading to master, is mastering your own emotions. It is the most difficult thing to do. So getting better at mastering your emotions is one of the best things that you can do to come back from a loss. But again, like, it really depends how big the loss is, right? Like, if it's a calculated loss and you know that your trading strategy works, but you lost like 3 trades in a row, your trading strategy isn't shit. If it's been winning the majority of the time, just step away. Just step away. Look towards another pairing, or maybe look at, okay, like, how come my trading strategy was working really well before and it's not working now? Maybe the market changed, right? Like, the markets will stay irrational. And this is obviously like more of that useless trading wisdom, right? That everybody hates, but it's really true. The markets will stay irrational longer than you will stay solvent. That's just the way trading works. So like, if you have a really solid trading strategy and it won a ton of trades for you, but all of a sudden you took like 3, 4, 5 losses in a row, that means that maybe the market is being more irrational than you know, whatever's happening. So, you know, that's kind of a thing. I made 10 winning trades and lost 60%. Ooh. So I have done that too. And don't take this personally, but it's because you got cocky. You won 10 trades in a row. You bet big, and then you bet more, and you loosened up your risk management and you loosened up your trade strategy. And that's why you lost 60% of the profits in one trade. That's why. Now, here's the thing. If you won 10 trades, that's awesome. If you lost 60% of the profits, that means that you still have your initial portfolio balance plus 40% profits. So, I mean, you still won overall, but you let your risk management go by the wayside because you started getting cocky. That's probably what I think happened, is you just kept like full blown longing, or you cranked the leverage up. That's probably what ended up happening. Mind your leverage, guys. Like leverage is the death of people. And I can almost promise you that this person that lost 60% profits in one trade, I can almost promise you the majority of the reason is either one, both, or, you know, like one or a combination of lack of risk management, like Nick mentioned, or abuse of leverage and over leveraging yourself. Those are the two leading causes of blowing up accounts, is just lack of risk management and you know, like that's it, you know, just lack of risk management and abusing leverage. Normally abusing leverage goes hand in hand with revenge trading, or, you know, some kind of emotional trading. Emotional trading doesn't just have to mean, what was I going to say? Emotional trading doesn't have to just mean revenge trading. It can also mean getting cocky because, you know, like this guy said, oh, I won 10 trades in a row. It sounds to me like you got a little cocky, cranked the leverage up, and your risk management went to the wayside. And that's how you ended up losing it. If that's what ended up happening, you know, don't beat yourself up about it. It happened. Now learn from the mistake, dial it back, turn the leverage all the way back down, take the profits that you had, take a week off. Okay. And then when you come back, clear all your charts out, start with a naked chart and continue from there, and learn from the mistake, and don't do that again. Like if you lost 60% of your profits because you got cocky and you turned your leverage up, now in the future, you know, it's like, man, when I'm on a winning streak, don't get greedy, right? Don't get greedy. Don't crank the leverage up. You know, like you are the master of your own emotions. Like nobody can teach you how to, not even a psychiatrist, right? Nobody can teach you how to master your own emotions. It's completely 100% up to you. And it is the hardest thing to do. Very, 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 very difficult. But yeah, I mean, it comes down to risk management, not abusing the leverage. Joined at the right time. Oh yeah, man. AC Trades. Hey, for all of you guys that are in here right now, throw that man a follow on YouTube. Austin Clark's the guy that runs that. That's his like live trading YouTube. He's more into like equities and trading indices and trading prop accounts and stuff like that. If you guys like that kind of stuff, big shout out to him. This dude, for how young this guy is and relatively new he is with trading. I mean, I don't want to call him a newbie, but he hasn't been trading markets for 12 years. You know what I mean? And this guy is he gives me a run for my money in equities. He's got a good trading system, really strong risk management skills. He knows what he's doing. Obviously, if he's trading with prop firms, he's passed the prop firm challenges, which are no joke. They're very serious. Give that man a follow. He deserves it. He's put the work in. So definitely a big shout out to him. Thanks for joining the stream, bro. Really appreciate it. Actually, you know what? In honor of him joining the stream, let's take a look at the, not the 10-year. Where is it? That's the dollar. Little over a year. 5 months for consistency and a little over a year of trading. That's highly, for what he is doing, that is highly impressive for how short of a time he has been trading. But Just in honor of that, let's go ahead. We'll bring up our 30 chart. This is his favorite chart. This is what he loves to trade. This is his absolute, like, this is like his baby's mama for trading. Like, he gives so much love to this. It is insane. So immediately, well, I can delete these off the chart. So just a quick rundown. The very first thing that I see here is obviously we had this smaller pattern, but the very first thing that I see here is this nice trend line breakout here. Test, rejected. Like, we put it in, boom, there's your first connecting point. Rejected, rejected, rejected. Throw over, we rejected again. Form this really nice wedge here in a smaller trend, smaller uptrend. Rejected here again. Smaller micro level of very short-term support. Retested with a doji even. Boom. And you even got the bullish retest here. Very, very clean price moves on this. I might have to trade this more often. I mean, this is really clean to me. Just really clean. Is there Austin, is there a reason why you trade this? Like, what's the reason why you trade? Is it just your favorite pairing? Is it just what you started out with and you don't know anything else? Is it because the price action is so clean? Like, I mean, like, look at these trends. Rejection, support. I mean, like, it's so clean, the price action. So clean. So fresh and so clean. This is almost looking like we delete this. It almost looks like it broke out of an expanding diagonal too, because you've got two touches. So there's multiple ways to draw this. I just noticed this now, but this is also, for those of you like classical charting pattern guys, this is your initial. This is your initial for the top. First connector for the top. Here's your third touch. Here's your third touch. Really nice megaphone here. Those normally end up leading to really massive continuations. So pretty impressive. I really like this price action here. US 30 respects structure amazingly. Yeah, that's what I'm just noticing. It's like pretty crazy how all of this gets respected so much. It's pretty intense. When I was first researching indices to trade, this is the reason why I stay trading it. Yeah, because of the structure. The structure on this is just like super nice. It's really, really nice. It really respects, it respects the levels. You have to respect the pump, you know? If you don't respect the pump. Who was that? Who was that guy that did that? He turned it into, it's like a meme now. I think it was Ivan on Tech, or Tech Ivan, or I know his name was Ivan or whatever. He's like, it's like a religion to me. I have to respect the pump. At night, if I go to sleep and I don't respect the pump, I wake up in the morning and I'm broke, or like whatever he said. It was hilarious. His accent is like hilarious when he was explaining that you have to respect the pump. For breakout trading, that's also crypto. US 30 and NAS are the crypto of the stock market. Yeah, I agree with that. NAS 100 is really nice too. Here's the NAS 100. Talk about respecting levels, right? So recently, like, look how far back these levels go. Since we're talking about NAS 100, we do a little legacy charting. I mean, like, look at these levels. Look at how far these levels go back, right? Like, all the way back to here. This is when this level first got formed, was back here. Let me bring up my drawing tool. Was back here. Okay. Boom. Because it was an order block. Rejected. Broke through. Hit that other next level. Okay. Of resistance here. Rejected higher. This ended up just being a throw over. But again, look at how the levels were respected, right? This acted as resistance. It came up. Didn't break the order block. We rejected. Boom, right back down. What happened after that? Boom, rejected again. What happened after that? Boom, rejected again. Really nice channel consolidation for a bull flag. small rejection here, broke out, super tiny wedge on a lower time frame here, and then look what happened. Very nice support retest. Moves up, boom. Another support retest of an even more important level from way back here. I mean, these levels that it's respecting are just absolutely insane. This is the reason why people trade like indice futures and futures options, right? On indices. This is the reason why people trade these things. And, you know, obviously this level is very well known since back in 2021. I mean, this level here is literally 2 years old, from August 2021. And like, look at where we just rejected here, right? So again, you know, if we look left, here's what I would be expecting. And Austin, let me know your thoughts. Man, me and Austin might have to do like a dual. Maybe me and Austin need to do like a dual stream at some point. Massive hole here in the price action. Okay. And look at what just got. I'm sorry for this being red. Hold on. Sorry, I'm a little preoccupied with the thoughts on my mind. All I'm thinking of is like, I pray that my wife like gets through surgery okay, and like there's no problems. But anyway, yeah, like look at this level, right? Boom, another level from back here, tested again. Look at this order block. Boom, filled it on this one candle, and then what did we get over here? Bam, nice bullish retest. So what am I expecting? I personally, if I was trading futures on this, I'd be looking to get long here on the open of this candle, right? Like I'd be setting bids during pre-market or right now for Monday to be getting in here. I can almost promise you this either gaps up or moves up on Monday, and we see a break of these highs, and we do one of these to the top side. I know that looks funky because it's on such a high time frame, but you know, you get the point. Granted, this is on a daily time frame. I know that Austin trades on smaller time frames, which is cool. That's fine. To each their own. At the end of the day, a chart is a chart is a chart is a chart. So, you know, I'm sure that if I crank this down all the way down to a 5-minute time frame, oh wow, that's a massive gap. See, this is why 5-minute time frames scare the living shit out of me. Like I would not be able, like I am emotionally not prepared for this. I'm not prepared for that. Like there's such a massive gap down like that. I'm just not prepared for that. How do I put the oh fuck, Fables lines? This doesn't have the overnight hours included. It doesn't. Did they move the goddamn button again? Or am I retarded? Countdown to bar close, auto, scale price fits, invert regular. What the fuck? Yeah, normally there's a button that like includes aftermarket hours or whatever. I don't have it here. But anyway, with the exception of that, if I was trading this, that's your resistance level above, right? That's your fifth. Obviously, it's around 15. So, I mean, that makes sense. It's also a mental level, but on just this area of price action, you know, this is the high that you're looking to break here. And you've got a pretty nice trend line here. Okay. It's respecting for the most. Ooh, maybe not. I don't know. That's a hard call because you don't have to. Well, yeah, you don't have well, this would be a second close. Once this closes today, this is going to be a second close. When are the markets? I mean, the markets are almost over. A couple minutes. So technically this would be a breakdown of this trend line here. Let's look at the volume. That is bearish right there. Double top into OBV, lower low in price. So that's exaggerated bearish divergence, the weakest form of bearish divergence, but bearish nonetheless. Yeah, major psychological level. Monday and Tuesdays, I'm pretty sure Mondays and Tuesdays are the days that Austin streams. So just keep that in mind as well, guys. He live trades like at the beginning of the week. I think he does it 3 times a week or whatever in his private Discord and stuff like that. So good times. Yeah, no, me and Austin need to get at some point. Me and him need to get on like a dual stream and stuff, and like shoot the shit and talk like price action and legacy markets. Let's see here. See, the other thing too is I'm wondering if I bring this up to a 15-minute. See, the OBV looks good with a higher low. The RSI looks good with higher lows. But the volume looks like ass. The volume looks like ass. But granted, it's going into the weekend. It's a Friday, right? So like normally volumes on Fridays is lower anyway. What was the day last Friday? 16th, right? So if we go back and we look at the 16th, yeah, the volume, yeah, it was about the same levels. 275 million. Yeah. 275 to 300. So that's about right. But in general, if you're trading this on a 15-minute chart, like this would be like that's your if you're trading horizontals, like that's your section right now, right? Like here's your resistance, here's your support. You're probably not going to consider midlines on such a low time frame here, but that would be what you're looking for, right? So immediately you want this high and this high. Those are your 2 points of interest to be breaking if you're bullish. And then if you're bearish, you're looking to be closing below here and then probably closing below here as well. Okay, so that's kind of just the way I do things. Everybody trades different. That's the glory of trading. Today was terrible price action. I took 0 trades today. And honestly, with this kinds of, first of all, that gap down in the morning, ouch. Like that's an ouchers in the morning. Like I would not, there might have been a trade if you were like really ballsy here to like retest the support. There may have been, I mean, that's a nice hammer, but it's a bearish. I mean, it's kind of a bearish candle. It's technically a bullish hammer, but it's red. So I really don't know if I would have longed into that. That would have been like super risky. But yeah, I mean, like the price action did not fluctuate at all. It basically round tripped itself all the way. So like it gapped down on open. And then when it opened, the price like went up what? Like not even 1% and then came right back down. So yeah, after the news, the volume just died off. So 100% agree. 100%. Anyway, let's come back to the rest here. It's kind of that. Let's go over here. That's just oil. We don't need to talk about oil. This has been getting interesting. I know that for weeks I've been harping on this. So just kind of a little update on the dollar. For weeks and actually for months, I have been harping on this very, very classic Adam and Eve pattern that was forming here. So this is since invalidated. The Adam and Eve pattern is now invalidated, as well as there was a cup and handle here. Okay. This handle went way too deep. Like basically this candle invalidated the pattern right here. This candle invalidated the pattern. So the cup and handle, that's invalidated. The Adam and Eve is also invalidated. So I don't really know what's going on with this at this point. Now I'm just kind of like not really too concerned with what's going on with the dollar now. I was what the hell? What the hell happened? How did it just like scroll down to the next? The fuck? Okay, you know what? Let's come back to a 1 chart layout and then just go back to it. I don't know what the hell just happened there. 4 hour daily. There we go. Come back. I don't know what I'm doing today. I'm really thrown off today, guys. Sorry. Like my mind is elsewhere. I wanted to do a stream for you guys and go over some charts, but my mind is, to be honest with you, my mind is not 100% here on the charts. I'm really nervous for, I mean, who's not going to get nervous for like a surgery or something, right? This is pretty much our next level that we need to be breaking right now. It's basically 103.5. So, I mean, if you're bullish on the dollar, you'd be looking for, something like this where it's going to grind higher. Respect this level with a retest, respect this level as a bearish retest, and then if it breaks it as a bullish retest before moving higher. So there is that. But in general, 105 is really the level to watch. Like if the dollar doesn't go back above 105, it's certainly not going on some crazy bull run and going back to 110. Now, if this Adam and Eve pattern had played out, it most absolutely would, and we would have seen 110 probably before the end of the summer. But yeah, this is very indecisive for me. I personally closed once this invalidated. I closed all of my Forex positions. I did make some money off of the Forex positions. Like I didn't lose money off the Forex positions. So there's that. But most of them, it was like small wins. But now that this pattern invalidated, I closed all those positions out, shut them off. And I'm going to wait until I have some more clarity on this chart, because this, even if you start coming down to lower time frames here, I mean, this is it's starting to get like really, really choppy in here. Even on a 4-hour chart, this is really choppy through here. Not really the kind of price structure that I want to trade. The Forex trades that I were in were swings because I knew that we were going to be rejecting here and causing some kind of, downside, right, in the dollar. However, once the cup and handle invalidated itself, I didn't, reverse any of my positions. I just simply closed them out. There's just too much indecisiveness here. So I'm just not really gonna mess with that. But anyway, if you guys I got about 2 minutes left for the stream. It's been about an hour. If you guys have more charts that you guys want me to take a look at or go over real quick, I'll be more than happy to do that. If not, I'm probably going to skedaddle on out of here, get cleaned up, take a shower, start packing a bag and everything, because I'm going to be in the hospital for a while with the wife. I don't know how long the surgery is going to take. It's not supposed to take super long, but I have no idea if they're going to be like keeping her overnight or something like that. I have no idea. But anyway, so there's pretty much that. I already have tweets scheduled to go out. I am starting a new promotion for the VENOM Algo for those of you that are interested in any passive income opportunities. I believe that the coupon is already live. So those of you that are dedicated followers get early access to it if you guys so choose. The code for 30% off for 2 months is summer30. Okay, that's one word. There's no spaces. Summer30, and you will get 30% off for 2 months of the VENOM Algo. So you guys have first access to that. Check it out, cobra-trading.com. Again, all the links are in the description below. Make sure that you hit that subscribe and that like button before you guys go. Help me out with the YouTube algorithm. I normally always do beers and Bitcoin unless there's like an emergency, like I've got going on today, or some kind of special event or a holiday or something. Beers and Bitcoin typically is on Friday nights at 8 p.m. Central, 9 p.m. Eastern. Normally I'm drinking for that. Obviously I'm not drinking a couple hours before I'm going to be going to the hospital with the wife. But such is life. It's all good. Anyway, yeah. Make sure, do all the social media things, like, subscribe, retweets, all those things. You guys are dedicated followers. I really appreciate you guys checking out the stream and being here with me. It's normally pretty much the same crew that comes out and watches the streams. Tell friends, let's get more people in here. I'm really, really trying to expand the YouTube this year. And I know that I promised a new tutorial series. I have been working on that behind the scenes. I know I haven't been putting out a lot of videos besides the short Bitcoin analysis videos that I usually do twice a week. But I am working on a fresh tutorial series for the YouTube that I'm going to start releasing those videos in July after the holiday. So take advantage of that promo code for VENOM Algo. Again, that is summer30, 30% off for 2 months Pretty awesome. When I first launched, I think I only did like 15% off for 1 month. So I decided, you know what? Why not? Let's expand the passive income family. Let's get, let's expand the Venom Algo fam. Let's make it a little more cost effective for people that are, not sure or maybe haven't used it before, and just run with it. So that's what I decided to do. That is now live. I believe it officially goes live tomorrow, but again, you guys have first access to that as a thank you for tuning in for the stream. So with that said, I appreciate you guys tuning in. I hope that you guys all have a wonderful and a safe and a blessed weekend. And until Monday, happy trading.